Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IPGo, the show where we take a look at the IPO world, past, present, and future. Let's start this week by looking at one of the most publicized debuts of recent times, that of cryptocurrency exchange Coinbase Global, which came to the market on April 14th via a direct listing rather than a traditional IPO. Trading on the NASDAQ under the ticker COIN, the stock opened at $381 with a market cap of around $100 billion. However, it's been pretty much downhill for the share price ever since. Coinbase shares are down by almost minus 35% over the last month alone. Coinbase did not raise any money at all at flotation, but it has recently announced an issue of $1.25 billion of convertible notes, which has effectively created a stock overhang. Timing is everything, they say, but that news broke as the price of Bitcoin and other cryptocurrencies started a major downside price correction. Bitcoin has fallen minus 35% in just 1 week. Coinbase is not without its fans, however, and tech guru Cathie Wood's ARK Invest Fund Management Group has topped its holdings in the exchange, having previously bought the stock when it listed. Though an extreme example, Coinbase highlights how the market for IPOs has changed in recent weeks, and if we look at the performance of 2021's IPOs, we can see exactly what that means for investors. There have been 173 IPOs this year, up to the 18th of May, of which 77 are trading above their IPO price. However, 87 stocks were trading below their issue price, with a further 9 issues unchanged. What's more, the total return or gain from the issue price for this group is minus 1.42%. This compares with a year-to-date return for the NASDAQ Composite Index of plus 3.42%. To some extent, the wind has come out of the IPO market sales. However, it could be considerably worse, as the Renaissance IPO ETF, which tracks long-term performance of selected new issues, has lost minus 13.46% during 2021. Some of the current problems within the IPO market could be laid at the door of SPAC listings, which have sucked up funds and taken investor attention away from traditional IPOs, and giving startups and other businesses looking to list pause for thought about the best way to proceed. However, there was a tantalizing story from the SPAC market this week, which, if it comes to fruition, could revitalize not just the SPAC sector, but the wider new issues market. Rumor has it that internet technology and private equity SoftBank is considering listing its Vision Fund via a SPAC in a deal that could be worth $300 billion. The Vision Fund invests money on behalf of SoftBank and sovereign wealth funds in a multitude of startups and disruptive businesses around the world. Its investments include names such as Uber, DoorDash, Slack, Klarna, eToro, and WeWork, and many others. If the Vision Fund were to list via a SPAC, it would be the largest deal of its kind. Is it just coincidental, then, that hedge fund manager Bill Ackman's SPAC, Pershing Square Tontine Holdings, the largest SPAC by market cap, let it be known that it's been working on a deal since November that may shortly come to fruition? Now, we could be putting 2 and 2 together here and coming up with 5, but could Bill Ackman provide the vehicle for a Vision Fund listing? It's an intriguing possibility, and one that we will be watching closely from here on in. In other news, JD.com, China's largest online retailer, is spinning out its logistics business via an IPO in Hong Kong. In a deal that could raise as much as $3.4 billion, JD Logistics will look to sell over 609 million shares in a range between $5.07 and $5.58, and trading should commence on May 28th. The deal would be the second largest IPO in Hong Kong this year and would be the third business that JD.com is listed as a separate entity. Traders will be watching the deal with interest because internet giants in China are under increasing scrutiny from the authorities in Beijing, who want to curb their power and reach and perhaps break up the groups entirely. The delivery and logistics market in China is experiencing stiff competition as overseas players, such as Indonesia's J&T Express, enter the space. JD Logistics not only delivers packages for JD.com, but also for other businesses as well. The firm has a blue-chip roster of investors that include the Vision Fund, Tiger Global, Temasek, and Blackstone, so this is definitely a deal to watch. Closer to home, weight loss and lifestyle group Noom Incorporated has raised money from private equity firm Silver Lake Partners in a move that's seen as a prelude to an IPO. Noom had previously been valued at $4 billion, but it's understood that it would aim to go public at a valuation closer to $10 billion. However, that would make Noom worth 4 times as much as market leader Weight Watchers International based on current prices, and that might be a bit much for the market to swallow. Noom is said to have had initial meetings with advisors, and a deal could come as soon as the second half of 2021. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.